Hi everyone, welcome back to Republic Labs. I'm David and today we will talk about the market, starting from Bitcoin, the bear market itself, and how to pick altcoins in this situation and where opportunities may lie for the next bull rotation. Okay, let's go. So first things first, as we have seen with the price volatility, in the short term we have a relief bounce, or some would the chop sideways, so to say. Technical and on-chain metrics were oversold when Bitcoin crashed a few days ago, and when we view this within the context of every previous Bitcoin bear market, nothing that is occurring right now is technically abnormal, and it is strangely consistent with prior late-stage bear dynamics. And so if we see from check on chain metrics here, the deep value zone between the $62K and $70K would align with an intersection between the faster models, which are these red short-term holder cost basis, and the yellow 200-day moving average, with the slower ones below with AVIV and MVRV. And we have seen this at all bottom formation phases in the past. And so based on the long-term models, 200-week moving average, MVRV, true market mean, BTC were trading at levels only seen 15 to 20% of trading days, coincident with bear market lows, and that means there is an 80% plus chance that the bear case has run its course. But based on the faster models like the short-term holder cost basis and 200-day moving average, BTC were at levels with fewer than 5% of bear market days being lower. And so there is a 95% chance that the degenerate traders are about to short the bottom and liquidate their accounts again and again. We will get our capitulation candle, but the bears don't know that, and which is why they will short the bottom rather than buy into it. Despite what social media tells us, Bitcoin has this remarkable ability to not die. And this is the process, this is how markets work, and we need to exhaust the sellers. Bear market floors do not form on good news. They form when everyone feels terrible and when Financial Times say that Bitcoin is still about $70K too high. Bitcoin can always go lower, that's for sure. But as a believer, as long as it's not going to zero, then it will find a floor, and DCA doesn't care about correction. Short-term noise, and one day we will look back at this bottom process wherever it finds its low, and it truly won't matter what the entry price was. The thing we're eliminating with DCA is the same thing that will cause the capitulation wick that we'll see many people sell at the bottom, the ultimate bottom of this bear, and DCA is the role that, eliminating the emotions playing into our decision making and letting the long-term probabilities of markets do the heavy lifting for us. In most bear markets, the industry doesn't bleed uniformly. There are always assets that exhibit resilience, outperforming the broader market, or at least providing a buffer against aggressive drawdowns. If you see, everything is bloodbath, red, but on February 5th, as we see, Bitcoin is broken down beyond levels many thought would hold. While every crypto is taking a nosedive, Hyperliquid has shown strength, as we can see here, driven by several core fundamental shifts from HIP-4 launch, announcement, so to say, real revenue, and supply dynamics, which are quite interesting. But for the next one, what to do? Probably the wait and see approach is often the hardest to execute, but it's currently the most prudent, I would say. We can set our happy prices, we can identify the assets that we have a long-term view on, and don't chase the falling knife. Set limit orders at prices where you would be genuinely happy to own the asset regardless of further short-term volatility. And you can watch for emerging sectors, whether that be a shift towards AI. There are a couple of AI tokens that are up, and DeFi also, maybe with fundamentals. Are projects still turning revenue despite the price action? With your reading list that you have probably bookmarked for a while now, use this downtime for deep research. Bear markets are for building and learning, and if you've been putting off that research paper or technical deep dive, now is the time to educate yourself so you're ready for the next bull. For me personally, I'm looking for 3 things to my portfolio: the evergreen, which is revenue generating assets for doomsday, hard money and privacy, and to Valhalla, so to say, for exponential tech. A lot of people are leaving crypto right now, you can probably see on the timeline, and including some well-known names, but I get why it's painful. When I think back to past cycles though, the biggest opportunities always come during times like this, and not from trading the chop, but from leveling up while everyone else is doom scrolling. And Andrew Kang wrote something pretty beautifully here, that some people think this time is different, that crypto's moment has passed, but I don't personally agree, and we are at one of the most profoundly asymmetric moments in history, and the only move right now is to lengthen your time horizon and abandon short-termism entirely. The world is moving towards tokenization. AI agents will need a native way to pay each other in a world that keeps printing money. Bitcoin's idea holds, and what's missing isn't logic, it's patience. Markets will go risk on again, and when that happens, the people who spent the slow months learning to evaluate protocols, spot early opportunities, and manage risk will capture the upside, and everyone else will be playing catch up. It's essential to always think about the downside risk, but this is the largest upside risk, as Andrew Kang wrote, the world has ever seen. And learn how to stomach risks for longer. This is not the time to trade. It's actually pretty ironic. He is a trader, but he says that. So investing generally outperforms trading for the vast majority of population, and the gap will grow larger than ever. One of Ethereum's biggest mistakes have been inheriting Bitcoin scaling conservatism rather than anchoring scalability to real-world conditions, like the yearly increase in hardware and bandwidth resources available, and this philosophy is actively being dropped by the community as everyone is changing their mind on what it means for Ethereum to scale. And Ethereum L1 is scaling. Rollups need to differentiate on functionality, and rollups shouldn't simply be boring clones of the EVM. Boring clones will die, but rollups that offer fundamentally different functionality can thrive. And rollups ultimately succeed when Ethereum L1 succeeds because it is the primary source of assets, liquidity, and security. But interestingly enough, scaling the L1 requires many architectural improvements. That is the way of how Monad is built. And high performance, fast finality, decentralization is how Monad introduces novel architecture. They do this in 5 major areas: so-called Monad BFT, Raptorcast, asynchronous execution, parallel execution, and Monad DB. And so a few people realize, but a couple of others have tweeted this, that Category Labs built out an EVM R&D arm with some of the brightest researchers in the fields, and they already built a world-class decentralized EVM L1 from scratch without bending a knee to make classic trade-offs. In the coming years, the innovations will scale crypto beyond what we previously thought possible. Bitcoin succeeded as digital gold but failed as private money. It achieved permissionless value transfer but full ledger transparency, institutional capture, and regulation friendliness means Bitcoin no longer fulfills the cypherpunk goal. And rising surveillance, AI-driven financial monitoring, capital controls, and asset seizure make non-debatable and non-surveyable assets more relevant than ever. Scarcity alone is no longer enough. In a 2010 Bitcoin Talk post, Satoshi wrote, "If a solution was found, a much better, easier, more convenient implementation of Bitcoin would be possible." The cryptography to solve privacy were still impractical for real-world use back then, so the early Bitcoiners made a bet that privacy would come later as the math matured. But Bitcoin ossified. The community coalesced around "do not change Bitcoin" as a core value, treating any protocol modification as existential threat. So when the zero coin proposal came in 2013, Bitcoin rejected it, abandoning the cypherpunk vision that animated Bitcoin's creation: money that could not be surveilled, censored, or controlled. So Bitcoin effectively locked out of meaningful privacy upgrades, and the team left to build Zcash. Using zero-knowledge proofs, Zcash preserves monetary integrity without transparency, and with trusted setup eliminated, mobile-first private UX, and easy non-custodial access, Zcash has crossed from theoretically superior to actually usable, positioning it as a private, quantum-aware complement to Bitcoin rather than a replacement. And Zcash now has a credible path to scale without sacrificing privacy. Tachyon does this by shrinking shielded transactions to Bitcoin-like sizes, eliminating unbounded state growth, and Zcash can support real-world usage while staying fully private. So the protocol is actively addressing quantum threats with Tachyon also, protecting historical privacy first, adding emergency recoverability, and then upgrading soundness. And Bitcoin has no comparable roadmap, and Monero's privacy is vulnerable to quantum de-anonymization. So Zcash is emerging as the only privacy asset with regulatory and institutional durability. The SEC investigation closed with no action. Zcash remains listed on major regulated exchanges like Coinbase, and Grayscale is pursuing a spot ETF with high signal allocators like Colossus Twins and Naval are publicly backing the thesis. The shielded pool is the product and it's accelerating. Shielded supply grew from 11% to 30% in 1 year, creating a privacy flywheel and acting as a supply sink. And this metric reflects real adoption, not narrative momentum, and its continued growth would materially strengthen Zcash store of value case. So Zcash represents an asymmetric bet on private sovereign money. The downside is that it remains a niche privacy tool, but the upside is it becomes the encrypted store of value that Bitcoin never became, capturing a meaningful share of demand currently split between BTC, gold, and Monero. So thanks for watching, guys. If you liked the video, give it a thumbs up and subscribe to Republic Labs channel. See you on the next one. Cheers.